Okay. All right. Everyone happy? Great, great sign in is different. I didn't get that. What exactly was that? Sign in is different. Was it a different, like Zoom is different this time?
Yeah, the Zoom interface is slightly different.
Oh, okay, okay. Hmm. Okay, I didn't realize that. Anyway, that has nothing to do with me. All right. Sam says, thanks. I finally showed it to reduced cost basis. Okay, sold puts. Well, if you're bullish, yeah, selling put is the right way to get, is one way to get a bullish exposure. All right. So markets were like hit all-time high, which is great. We have a big earnings to talk about. You know, the company that wasn't in on many people's radar, including the Wall Street, now suddenly has become, the company that can make or break stock market. So what, in a span of 12 months, how quickly things change. It's so different. Because a quick question, was there any trouble in signing into Zoom or just that the interface was different? Because for me, to start the meeting, for me, there was no change.
No, signing in is not a problem, but the interface is different. They have updated the Zoom, I
Okay.
guess. I
Yeah,
mean,
that.
in the bottom, you see the summary, AI companion,
But that,
and
oh,
some.
okay. So this, yeah, so summary AI companion, that I've been seeing it for a few months. So maybe it looks like the Zoom application on your local machines. You probably updated it just now because I've actually used this summary AI companion earlier. So whatever we discuss, it actually could, maybe I should start summary right now. So I think I've used it once or twice. So whatever we discuss, it actually generates a meeting notes at the end. So okay, so this interface I've been seeing. I thought maybe during the sign-in there was something that has changed. Anyway,
I, I guess you can control which is going to show up in the Zoom interface for us. And, these are all extra widgets, I'm sure, right?
yeah, I don't even know. I mean, I haven't even changed any control. So other thing could be that the Zoom update ran through, and in that you seeing all this. In any way, I thought there was an issue in trying to sign into it, so that would have been a problem. But yeah, as long as there is no issue in signing in, we're good. Okay, so I think for today, couple of earnings review. Um, I want to go through. Of course, we'll go through the biggest one, which is Nvidia. So that's moving the markets a lot. And the other one will be, my favorite, Mercado Libre. And that'll also be an example of sometimes, the overreactions, etc. Anyway, I'll give you my thoughts, and then you can decide. You can make your own decision about the company. Then we'll also do a deep dive into, or probably a refresher, but those who are attending for the first time. And I am seeing a lot of people are new. Probably for them will be first time to go through NanoX. So we talked about this company last week or a week before also because this got caught in the whole whirlwind of AI and the stock was up like 100% and then jumped up more and all that stuff. So there was a question, okay, what is this NanoX? So I thought, yeah, we'll go through, what NanoX is about.
You're
So
not going to, you're not going to talk about SMCI?
what is happening to SNCA again? Yeah, I mean, NVIDIA. So I'll probably, yeah. So this stock is pretty volatile, right? So from 1,000 went all the way back to 650. Then after NVIDIA results, jumped all the way back up to, I thought maybe it'll hit 1,000, but probably did not, or maybe barely at the high it hit 1,000, and now back to 860. Yeah, I'll stay away from this. I mean, this is um, lottery tickets, or if you want to get some excitement, yeah, do whatever you want to do. It's your money. Excitement generally doesn't make money in the markets.
I cannot stay away from that now.
Yeah, I don't. I think anyone who is investing or looking at the markets can't stay away from anything that's related to AI. Anyway, I'm not chasing this. Not really worth from a business perspective.
I'm not
So
changing it, but I'm just doing some options on that.
yeah, yeah. As long as you stay a defined risk in this one, I think that should be fine because you already know what your maximum risk would be, right? Just that going on undefined risk on a stock like this, you know, these are the stocks that's in trader parlance called widow makers, right? There's such huge stocks with such a volatile moves. So that reminds me, Netflix, when before the Netflix earnings, the expected move was around 11%, which was almost 200. No, yeah, around 11%, and Netflix actually moved larger. Even 11% for a company which is like $1.5 trillion was really big, and Netflix even moved even larger than that. It moved almost 15%, and what it broke a new record of market cap addition by any company. So prior to Nvidia, this guy Facebook, they put up a new record when Facebook went up what 45%, sorry, not 45, 25% after their recent earnings, right? Yeah, when it jumped here, opened up 25%. And now NVIDIA broke that record. Now NVIDIA holds the maximum amount of market cap added by any single stock uh, in a day. It was what, 240 or I don't recall the exact number, but you can combine some a few big companies all together, and that's the amount of market cap that NVIDIA added in a single day. Even there are discussions, maybe NVIDIA is even more important than Fed, right? The amount of the market that NVIDIA can move, which was what NASDAQ was up like 2.5%. S&P, like SPX was moved what almost more than $100 or $150. That's even Fed doesn't move market so much as much as Nvidia had moved, right? So that tells us how much is a frenzy is going around anything to do with AI, specifically anything related to Nvidia or adjacent to Nvidia, right? SMCIs, SoundHound, even NanoX, and any other companies which are either the suppliers of NVIDIA or have a collaboration with NVIDIA. You just put a name NVIDIA and the stocks just takes off. Anyway, so all right, so let's get started. And again, looking at this whole AI stuff, another stat which is around semiconductor, which is lot of speculators are now piling into SMH, which is semiconductor ETF, right? So, and this has got NVIDIA as its best holding. So this is a chart of Jan, 2024. The amount of money that has flown in last 3 days. This is just before the NVIDIA's earnings. It's almost what 200, 300. It's almost $600 million flew into SMH just to play the NVIDIA speculation just before the results. So yeah, other one was this one, which is way out of money. 1300 call that has expired. There's like 53,000 contracts were open. Call contracts were open. So which is like, I don't know who's swinging these far out of a money calls and speculating on could Nvidia maybe double after earnings and before 20, on 23rd Feb. So a lot of crazy stuff going around in Nvidia. I say common Nvidia 500 shares is equal to 55 gain in compensate for Melly loss. Good for you if you're holding Nvidia shares. So what else? Any other AI players looking at? So since we talked about Nvidia, let's start. I'll start with the Nvidia earnings, and then see what else you guys looking at. SMCI CRWD. Oh, that's a CrowdStrike. Yeah, SMCI we just talked about. That's a lot more a speculative play. At the end of the day, that's a hardware assembler company. If I may say it, they create racks for data centers, and those data centers, basically those who need AI chips, with the operating margins of 10%, like between 10 to 15%. So I don't know why SMCI is like going where it is going, but I think in this, when it is AI, everything is justified, I guess. Palo Alto net worth. I think there is a CrowdStrike. Yeah, CrowdStrike is a I don't know whether right now. I mean, CrowdStrike has always been a play of uh, more of a SaaS cybersecurity, and now I think every software company will bring in AI into its commentary. But when it comes to CrowdStrikes, they actually use it to analyze the threat and then dissipate the threat, basically push out the solution across all their customers. So I like CrowdStrike. I hold it in my portfolio. Palo Alto net worth. So PANW's transition from being a firewall and an on-site solution provider to SaaS-based is going rocky. I don't hold any Palo Alto net worth, but maybe now it probably may look more interesting, right? So I know it fell down hard after earnings. Geez, almost like closed the day after earnings by almost 28% down. So it's like what, at 260 right now. That's crazy. So anyone who hold Palo Alto net worth, Naresh, do you hold it or you just kind of watching it? PNW? It's the time to add new. Yeah, right now, but if you're looking at, it's a price to earning 44, price to sales is 11. Uh, here's my thought on Palo Alto net worth. So I think, haven't they grown a lot more via acquisitions? So I listened to I didn't listen to the earnings call, but I think I read the management commentary, especially Nikesh's commentary was around. I think the market reacted so negatively on Palo Alto net worth was because now they're saying they want to focus to push more products to their, like more modules to the same customers. And if that means that they will have to kind of give some modules for free or some product for free, they will do it. Rather than so basically now they start to focus, instead of individual products, more of a platform story. And that's what they want to sell to customers, sell the overall platform and let them have them add more and more modules, right? If that's the case, I know CrowdStrike from day one has been the story of our platform. So I've yet to look into Palo Alto net worth in terms of how they've grown. The other thing I heard was that Palo Alto has mostly grown by bolt-on acquisitions and never really had their own core in-house, building a ground-up solution for the new, I would say, new era of cybersecurity. So whereas CrowdStrike has been built up right from day one for SaaS-based cybersecurity, so that's something which I need to go back and look at the history of Palo Alto Network. I don't know if you're holding it. Is that, do you know, have they grown more from acquisitions or more from organic growth? So these are the two things. Nvidia going 3 trillion, Microsoft going 4 trillion. If it's a matter of if, it's a matter of when. It's not a matter of if, but when. Yeah, today that's the market sentiment, right? We're gonna go higher. Doesn't matter what the interest rate is. Doesn't matter that the Fed is not gonna cut the interest rate by now. I think we're not even expecting by March. March probability is 0. Even for May probability has come down. Yeah, it's all green. These are the exuberant times when I think we have to be more careful. Yeah, what's a crash? SMCA is server and storage. 99% analysts analyze to go to 1050. Analysts just chase the prices. Majority of them. There are a few analysts who will actually do a ground up valuation to find out what the company's value is worth. Majority of them, they just do the pricing, and pricing is based on what the new participants or any participant in the market is willing to pay, and that's got a lot of I would say a lot of exuberance and excitement. Sentiments play a lot more role into that. So if the SMC is going higher and higher, yeah, they'll talk about going to 1050. I mean, you look stupid as an analyst if your target is $400 and the stock is sitting at whatever 800. Are you telling your clients that that inherently you're telling your clients that the stock is overvalued, they should sell? So rather than saying that, you'll raise the price. So I don't probably give too much credence into when analysts start to raise their prices after the stock has run up, right? Hey, should have done it sooner. Don't do it after the stock has gone to $900 and then you come back and say, hey, it is worth $1,000. If the stock was at 500 and you make a call for 1,000, I'll love that. But I don't see many analysts doing that, Mantho. Shripi holding Palo Alto net worth. Naresh says bought a call buy after crash or cheap price, sold put for Palo Alto, holding CrowdStrike. Yeah, I hold CrowdStrike. I don't have even any trade on Palo Alto. Maybe I need to spend some time on Palo Alto to see, how they've grown, and should I go for Palo Alto? In fact, when CrowdStrike fell, I think after Palo Alto results, CrowdStrike also was down 10%. I added a little more to my CrowdStrike position. So, yeah, let's dive into NVIDIA. Okay, any NVIDIA holders here? Who own NVIDIA? Come on. I see 1, 2. All right, 3. Okay, so let's talk about, right, I don't know, maybe I can say the most, okay, we have, a few stocks. Even if you hold one stock, you can say, yeah, I have NVIDIA in my portfolio. I'm not asking how many stocks. Yes, I have NVIDIA. So yeah, NVIDIA has now become So Rutwa, he says, you have a decent position. Good for you. Congratulations. It has now become kind of the most important company for the stock market, maybe for the economy, and maybe for the, a near future. So let's look at NVIDIA as a company, right? So I was really, really impressed in terms of headline numbers that they posted. I mean, you don't see these numbers very often, right? Which is like revenue was up 265% year over year. Again, $22 billion revenue, which was, again, better than what the market was expecting. Market was expecting 20 billion, which was still, a bigger number, and NVIDIA just blew that out. They delivered $22 billion, up 265%. Gross profit is like 16.7 billion, up 338%. If you just look at this particular column, the numbers out here, these are kind of ridiculous. Looking at the operating income, up almost 1,000%. Net income is up 700 or 800%. Cash flow is up 400%. So EPS is up like 700%. So, I mean, this particular quarter, amazing, right? And all thanks to their data center stuff. If you look at their data center revenue, that was like almost $18 billion, which was sequentially quarter on quarter, that was up 27% and was up like 400% year over year. Right? Full year revenue is up almost $60 billion, $61 billion, which is 126% up, right? So amazing quarter. And the other one, which was a big one, was their professional visualization. That grew like more than 100%. So when it comes to the headline numbers, all numbers look great. And this is despite the fact that the data center revenue was a bit challenged because of the US restrictions on China. And even with that constraint, they were able to deliver some amazing results. So what did Jensen have to say? Accelerated computing, generative AI, right? Right now, all the valuation are coming because of this, the AI, and coming across all the companies, industries, and nations. So if you followed it, we've seen Jensen Huang, he was in Middle East, talking to some sovereign nations on getting how many of the, not just the companies, but for countries, now it's a strategically important for them to build their own, AI solutions and all that stuff. So amazing results, and I don't think there's anything to complain about NVIDIA results. Not only that, they also paying some nominal dividend, and they increased their share repurchase program for additional $25 billion, right? So from capital allocation perspective, all great. Looking at the guidance, not only the existing quarter was great, but even the guidance was also above analyst estimates. So they gave a guidance for $24 billion, plus or minus 2%, which was above what the analysts were expecting. So all throughout, some great results. So before I move forward, let me see some comments. I started loading in 2021 till mid 2022. Yeah, that was a good time. I only opened my position after this ChatGPT came out. Asif says, being rolling my covered calls for the last 2 quarters, that would have been that's a tough position to be in, right? When these stocks run away. So doing just a covered, that's why in some of these stocks, which could be very speculative or, could just run away from you, I rather prefer doing a covered call spread. Then you can covered call, maybe do a $50 white, $60 white spread, right? In that case, you probably will, lose maybe 10% or 15% of the premium that you would have taken on a just pure covered call, but that helps a lot in the scenarios like these. So I learned this lesson in 2021, in 2020. 2020 and 2021, when I had some of covered calls, and the market went crazy. When the market went crazy, I ran to the same situation where you have to, um, you know, continue to roll it. So I learned my lesson. And if there are some stocks that I want to hold for long term and are, hot stocks, I rather do $50 wide or $60 wide covered call. I mean, on NVIDIA, I've been doing that. If you guys know, I've been doing that and talking about, oh, I did a covered call spread, like $50 spread, and it's just blew through my spread. So, so at least I was still in the game, closed the spread, sold a little bit of a stock, and still in the game. Did that another one, again it blew through the spread. So, so yeah. But yeah, instead of doing so nice, my retirement account doesn't allow spread covered call, or it's a account doesn't allow you to do spreads. That's a problem. Maybe you should change your account and move it to somewhere else. Jay asked, what do you put more cash to buy Nvidia now? That it has shot up so much. I'm talking about 3 to 5 years, unless something changes drastically. So I'm going to talk about it. I'm going to talk about what's my at least what I am thinking for myself, Jay. Then you can decide what works for you. Rudva says Nvidia is watch state in my view too much too soon. Yeah. Same boat for AMD. Jay, what's the logo on right of my clock and date? Oh, this must be the Copilot. This is probably Copilot. Oh, so I've not used it. Maybe I need to study and maybe start using. This is a Copilot for Windows. Okay, yeah, Shri said that. Thank you. All right, so let's look at a little bit of a management commentary. Again, so I'm not gonna go through all, but if basically they announced a bunch of partnerships for their data center. They have partnership with Google, partnership with Amgen to use NVIDIA chips for drug discovery and all that. Partnership with Singtel to get NVIDIA into Singapore, for the telecom companies. Partnership with Cisco to I think Cisco will start selling the AI infrastructure from NVIDIA. So a bunch of partnerships. Nothing exciting on gaming, but yeah, it's right now is the story of all data center. Right. So here's my conclusion. I think a couple of you asked them. This is what I'm doing for myself. Okay. Which is right now, I think it's too expensive for me to add new cash or to initiate a new position right now. Because even if I'm looking at it's like in 2023, their overall earning is almost 11 bucks, so which is a P of 72, really high, almost 13 times sales, which I know maybe if they continue to grow their sales the way they have grown, then it won't be looking as expensive as it is right now. So right now, I'm not trying to add any more, if at all. At max, what I may do is to maybe sell a put spread, but I'm not gonna buy at whatever 700 bucks at which Nvidia is trading right now. So I still am holding my Schmuck insurance, 1/3 of my portfolio. And I'm okay to hold that. I don't care where Nvidia goes. I'll be able to sleep well, with that position. So I'm still hold that position. I'll watch it from sidelines. Right now, Nvidia is valued more than Alphabet, which is Google. And if you look at the numbers, Alphabet's net income is more than Nvidia's total revenue, right? But of course, Nvidia is focused more on the future, and Alphabet is having its own challenges with their AI, and hence market is valuing Nvidia a lot more. But can Nvidia continue to grow their revenue by 50 to 60% for next 10 years, 10 years, 15 years? I don't think so. Right? Maybe a few more quarters, year or 2 years, but it unless they are doing something on which they have a huge patent, or unless it's a monopoly situation, competition will come in, right? So I'm looking at that, and I'm thinking, maybe a lot of the growth is already priced in. Right? I could be wrong, guys. Anyone, so don't take a decision because I said this. You decide for yourself. This is for me. So from my perspective, I'm thinking, guys, too much is already priced in, and I just want to. I don't think that the capital market, the competitive market will allow it to grow the revenue, by 50% year over year for the next 10, 15 years. Right? There will be other startups who start working on maybe how to use a combination of cheaper hardware and maybe use software to optimize the workloads. We don't know. There will be, because if it is so attractive, it will attract a lot more capital into trying to disrupt it. So based on that, I'm like, for me, it's right now it's too expensive to add. Maritza asked, I hope I'm not butchering the name. What do you mean by schmuck insurance? Okay. So here's the deal. And I think you only started joining recently. I've been talking about NVIDIA for quite some time. And I think I sold a little bit of my position when it hit 425. And then I sold the next tranche of it when it hit 695. Right now, from my, I think 695 when I sold it. From that, even that was, I couldn't justify the valuation of 695 of NVIDIA at that point of a time. Right? If I'm looking from a purely from valuation perspective, maybe I should have sold 100% of my NVIDIA position, right? Hey, if you think it is overvalued, if you think that it cannot grow, the sales and the revenue as much as it is priced in, why not sell everything, right? But that's where the schmuck insurance come in. I don't want to be, the pricing can go anywhere depending on what the next person is willing to pay, or what's the new investor who is like missed out on all the gains so far is willing to pay, right? So stock could go to 1,000, 1,500, who knows? So I don't want to be looking like a schmuck sitting, oh gosh, I sold 100%. Right? So that's what I still have 1/3 of my initial position. So I'm out of my 2/3 of position. I'm holding 1/3 of initial positions so that I don't look like a schmuck if it goes to $2,000, right? So that's my schmuck insurance.
Vivek,
Yeah.
among the 40 analysts, they predict the next 12-month price of an average of 867.93, and one person says 1,200 as the high and 575 as the low target price for NVIDIA.
So I think NVIDIA I remember, I think I tweeted about it. All of them updated their price targets after the earnings, right? So if you look at all these updates happened on February 22nd. And you're right, the highest is 1,100.
Yep. So Vivek, a quick comment on the schmuck insurance. Is it playing with the house money called schmuck insurance?
Sorry?
Playing with
Yeah,
the
you
house.
could. Yeah. So I am playing with the house money.
Got it. Okay, cool.
Yeah. Yeah, that is my house money. And who knows? What if short term it could go to anywhere? And I don't want to be looking like like a schmuck saying, oh, you sold off everything. So for me to sleep well, hey, I'm holding that boat for that much amount of 1/3 of my NVIDIA position. So, Asif says GPU requirements for training will not grow exponentially, but for inference, it can grow and stabilize at a current rate. Yeah. So there is another company just listening about it. a new startup called Grok, right? In which the SPAC King has investment, not GROK. GROK is Tesla's, that's Elon Musk's GROQ. Yes, I think Chandra got the right one, right? So they are working on similar thing is to make basically for, I think that is specifically focused on inference workload. You don't really may not need the expensive chips, but use a software to optimize it. So Chandra looks like he already used it. Yeah. So again, my thinking is there will be many companies who capital will flow into companies trying to disrupt the NVIDIA's business model, right? It's a capitalism. It will sometimes it takes time, right? Google was able to enjoy this whole monopoly for what, almost 15 years. Now it's getting disrupted. Whether for NVIDIA, whether it'll take 5 years, 2 years, 1 year, that I don't know. But I don't think they can continue to perform at the level at which they have been. So yeah, I was reminded of this quote from Scott McNealy from Sun Microsystems, which was like, it was trading, the Sun Microsystems was being traded at 10 times revenue. So this was like quote from him to the Wall Street analyst saying, at 10 times revenue, to give you 10-year payback, right? If you're expecting your payback is 10 year, I have to pay you 100% of revenues for 10 straight years in dividend. That assumes I can get that by my shareholders, first of all. That assumes I have a zero cost of goods sold, which is very hard for a computer company. That assumes zero expenses, which is really hard with 39,000 employees. That assume I pay no taxes, which is very hard. And assume that you pay no taxes on your dividend, which is kind of illegal. And that assume with zero R&D for the next 10 years, I can maintain the current revenue run rate. Now, having done that, would anyone of you like to buy my stock at 64? Do you realize how ridiculous those basic assumptions are? You don't need any transparency. You don't need any footnotes. What were you thinking? So this was his comment when the stock was trading at 10 times the revenue. NVIDIA is trading at 13 times the revenue. Maybe our payback period, we probably have the current breed of analysts have a lot more patience. We can wait for 15 years, 20 years for it to pay back to us when you're talking from a valuation perspective. If you're looking at just a pricing, then the bigger question is how much is the next person coming to the market is willing to pay, right? Which is anybody's guess. Today, markets are going higher. Everybody is excited about it because they see their neighbor making money in NVIDIA. They want to jump in the market. Maybe take a slice of, maybe buy a, some out of money call, which will have market makers will basically buy the stock to hedge it and, try to do some gamma squeeze, stock goes higher, right? So price could go anywhere. But from valuation perspective, if I were to do it, maybe I'll look at a put spread. But right now I'm just sitting tight, sitting on the sideline and watching the fun in the market. That's my thought on NVIDIA right now. Tommy and couple are saying NVIDIA is compared to Cisco from 1998, 1999. Yeah, I mean, but Cisco wasn't. So if you're looking at NVIDIA from a valuation, so that if you look at forward PE perspective, Chandra, it doesn't look that expensive, right? But the bigger question is, will NVIDIA be able to deliver all the growth that is being priced in? I mean, Cisco was even in a worse situation. It from like a PE perspective, etc. Or they were even way more expensive than where NVIDIA is trading right now. Funny about on NVIDIA is when NVIDIA was $300 billion company, from a valuation perspective, if you're like traditionally, value investor looking at a PE, it was more expensive at a PE level than when it is a close to $2 trillion company. Because now the expectations of the earnings have grown way higher. The current earnings itself has grown way higher. My only question is, can it continue to grow at the same rate in future for long period of time to justify all the price, all the growth that has been built into this price? That's the only thing. But yeah, it is from valuation metrics, NVIDIA is cheaper at $2 trillion as compared to when it was at $300 billion. That's something, a strange mind-bending fact, but it is a fact. Bobby asked, does term revenue and earnings means the same? No, revenue, earnings, when I say earnings, I'm talking about EPS, you write earnings per share, which is your net income. Revenue is your top line, earning is your bottom line. NVIDIA has $2 trillion market cap, 2.46 billion hours, and it says Sam is seeking 7 trillion. If you apply market cap to NVIDIA should be at 2845. Yeah, Sam should go to San, Masayoshi San. Probably he'll be able to get this whole 7. These are some ridiculous numbers that are now being thrown in the market. Remember, I don't know, rather than Cisco, maybe other comparison could have been the broadband companies, right? When the internet was coming in, hey, we need broadband. No doubt, everyone will need more internet bandwidth, right? So much of a capacity was built in that many of those companies didn't survive. There was overcapacity. I don't know. Right now, NVIDIA can hardly supply the market demand. They can barely meet the market demand. There's so much of a demand in the market. The question is, will there other players like Intel has started to build some chips, right? Intel announced partnership with Microsoft to build some chips for their, and I forgot the name of the chip, but they announced some partnership with Microsoft. They'll supply some chips to them. So maybe, is there going to be overcapacity? Again, future is uncertain. All we can do is to look through some historical past and see how the human behavior has been. In the reasons are different. Sometimes it was internet. This time it may be AI. Sometimes it could have been, electronics. So reasons always are different, but the behavior is generally the same. All right. Similar to 2 previous waves, NVIDIA is generally a company at the right moment. They rode gaming, they rode crypto mining, and now then little for some amount of time, they also rode a wave on data analysis, right? Running TensorFlow workloads. They had their DAUs, and now they got on AI wave. Yeah, I agree. CUDA has a lot more lock-in. That's built the whole ecosystem, the big compiler that they have on top of their chips. That's got a much bigger lock-in than others. But again, guys, future is uncertain. No one can peek into the future. They can all sitting at that point of a time. I think it always looks or human nature. We don't know. We are right now assuming unlimited profitability in this particular space. At the end of the day, unless the applications start to come in and the real companies start to make money through AI, I don't know how long can they just. Right now, all the AI use cases are for fun, right? No one is making money on AI. So at some point of a time, the companies will have to justify why they want to spend billions of dollars, right? Meta, Google, Amazon, or even the non-tech companies, they will have to justify why they're spending so much money or doing capex on AI. And if they can't, they don't see the benefits, we know what will happen. Right now, let's make hay while the sun shines. All right, market performance, S&P is up 6.5%, 6.7%, which is great for the year. So it's a good start to the year, right? And not surprised. Fear and greed index right now is at 78, which is like extreme greed. And looking at a 5-day average put call ratio, barely any put buying happening. It's mostly it's calls. And now if you look at companies like Nvidia or AI related companies, is like calls are like 4 times more than puts. So it's all I would say it's to the upside. The risk is too many calls being bought than the puts. So everyone is on one side of the boat of AI. All right. Other interesting tweet. Looks like Bill and Melinda Gates been selling Microsoft. Jamie Dimon sold 150 million of JPM. I read it on Bloomberg. It's for the first time since long time. JP Morgan, Jamie Dimon has sold his JP Morgan shares, and JP Morgan hit new all-time high. Zuck sold Meta. Bezos has sold $8.5 billion of Amazon. Lilly endowment for 130 million. Alex Karp sold Palantir 25 million. And McDermott, which is ServiceNow CEO, he sold 26 million. Just a number. You could draw whatever conclusion you want to, but last time when Bezos and who else was selling? I think it was Jeff Bezos. It sold his holdings. That was very percent, and after that, you know what happened in the market. But just some interesting stats from who's been selling. All right, did you guys do any selling? No sales? All right, earnings next week. And the stuff which I will be watching is Li Auto. That's if you recall, that's my recently opened position, basically circulating capital from other EV players of China into Li Auto of China. So still the similar amount of Chinese exposure, but just change the companies. There's Unity, Kawa. We did a review of Kawa after the IPO, so just want to see how they're performing. Exxon is one stock which I've been in and out of Exxon. It's I mean, what they kind of got a almost monopoly like. They built a monopoly like ecosystem, and now they've been trying to build their whole SaaS offering. What I don't like is there are low operating margins, so I've been in and out of it. The options are difficult to trade on this one, so right now I don't own any Exxon, but we'll see. Baidu reporting on Wednesday, Snowflake reporting on Wednesday after close, and then Zscaler reporting on Thursday. We also reviewed Birkenstock, so want to see how they're performing. It's again a new IPO company, and Viva and Fubo. These are the companies that I've analyzed it long back. I don't hold them in portfolio, but see if they need some attention or they deserve some dollars for portfolio or not. Yeah. So Viva is Chandra, yeah, Viva is good biotech company. Viva is not a biotech company. I think Viva is like a Salesforce for biotech companies. They basically create the software. It was also founded by a person who was ex Salesforce. And I think maybe Salesforce CEO has some investment in it. But yeah, it's a SaaS CRM company focused on the biotech industry. And Fubo TV is interesting. One was they recently sued this Disney, Warner Brothers, Fox. I think 3 or 4 of these media companies came together to create a new yet unnamed sports streaming service. So Fubo have decided to sue them. I'll say otherwise, I mean, Fubo is done. If that streaming service is take shape, then there is no use case for Fubo. So I think that's why Fubo wants to sue them. All right, so buys and sells this week. I had only 2 buys. Again, took advantage of when market punished these stocks for, I think, for no fault of theirs. So I added little bit to my position, Mercado Libre and CrowdStrike. Such says Kramer was pumping RadNet. Ever explore what the heck is RadNet? I have no idea what this company is. RadNet. I think not even heard the name of this company. Healthcare Diagnostic and Research. $2.6 billion, 3.97 income, $1.58 billion sales. So what do they do? Okay, radiology. So basically, it looks like they've got imaging centers, AI to, and then, okay. So basically, radiology imaging centers. I don't know. Okay, sales have been growing crazy. Looks like, no, not much. Sales for past 5 years have been like 10.67% year-over-year growth. Barely any earnings, so we can ignore that. So it's not a biotech company. It's basically a radiology company. Been there for almost 30 years. The largest provider of freestanding fixed radiology diagnostic imaging company with more than 350 centers. No, I'm not interested. So medical imaging and all. Okay, I get it. Well, that's yeah. So we actually gonna talk about another company which is adjacent to this one, on which I am interested in. I mean, because I hold that. But it doesn't look to be, like 5% of gross margin. I would rather use my capital somewhere else. Mainly is high price. Is it good to add at this price or only in future pullback? I didn't look at from a valuation perspective. Melly has generally always been so pricey. I mean, it's never, I've not seen Melly trading at a, except when, we had a general weakness. In terms of the valuation metrics, Melly is generally expensive one. Do you invest in bonds, TLT? Yes, when it comes to bonds, I have 2 mechanisms. One is I directly buy treasury T-bills on Treasury Direct. That is one. The other is I have exposure to TLT. So okay, so I'm selling a put to $250 below trading price. Yeah, I mean, I have a put spread in Melly right now. So when the stock fell down after earnings, I bought a stock and I also sold a put spread. All right, so let's talk about Melly. Right. For those who are uninitiated in Melly, a quick okay, so let me answer. The Treasury Direct will not send 1099, but you can go and download it from, yeah, you can go and download it from the website. Yeah, the format is really different, but you can just, save it and save as a PDF, send it to in your CPA, or if you're filing your own tax, you have all the information. All right, let's talk about Melly. So Melly is kind of a 5 or 6 businesses combined together. They have an e-commerce business just like Amazon. They have a payments business, which is a big one, which is just like, I would say, as a PayPal. They have recently, over past few, in past few quarters, their advertising business has started to grow, right? Then they have a logistics business, which is Mercado Envios. Then they also have because they deal with a lot of small businesses and the sellers. They also have a business where segment wherein they provide credit loans, etc. to them, Mercado Credito. And I think there's one more. Anyway, so they have like multiple businesses, but the biggest one, two big ones right now are of course, their e-commerce, which is selling of goods online, and the payments business, right? So overall revenue grew 42%, and these are all dollar figures. And Mercado Libre, it's generally you don't see CNBC or folks talking about it because it's not a US based company. It doesn't have many operations in US, right? So it's you have to be also okay with investing in a company which is domiciled in a foreign country and derive almost all of its revenue from foreign country, non-US countries. So if you're looking for a geographical diversification exposure, Mercado Libre could be one. But then you also have the issue that you have to deal with. This is a foreign currency risk, right? And now with the dollar becoming stronger and stronger against other currencies, we will see how the results of Mercado Libre have been impacted by it, right? So because I'll bring in, foreign exchange neutral numbers as well. But these numbers are all dollar-based numbers, right? So revenue grew 42% year over year. Overall for the company, gross profit was up 34% to almost $2 billion, 45% gross margin, 5% operating margin, and operating margin actually, operating income was less 30%, and we'll talk about it why. So on an average, operating margin has been like mid-teens, which when you're talking about an e-commerce company and the payments company in which the margins are really very low, I think this is a decent margin. Good operating cash flow was up 25%. And of course, because of operating income was low, net income was low, and the EPS diluted was low. So no change in net income, $165 million last year, previous year, Q4, same is the case this time, EPS, no change. Margins were really low, and I think Street didn't like it. So, but if you look at if you want to analyze the business from how well you're operating the business and not based on the things that I can't control, like Argentina government devaluing their currency, you can't control it. And as a business owner, I'm a part of Argentina, I can't control it. So if you want to look at a foreign exchange neutral numbers, you neutralize the impact of foreign exchange. Revenue was up actually 83%, which is huge. Gross profit was up 82%, almost 83%, right? So it pays to look at, either foreign exchange neutral, or some companies will call it as a constant currency, CC, right? So this will tell me whether the management really performed. Let's say if the dollar weakens against other currency, these numbers, the dollar's number will get boost, but then the FXN number may not look that good. So it'll give you some idea of, are they enjoying the tailwind from something else, or are they enjoying are they doing better because they're operationally, or management doing operationally better? Profit margin is very low at 8.65%, which number 8.65, but yeah. So net in this quarter, profit margin is low. And overall, I think when it comes to the retailer company, making low teens is a decent, I would say, margins. So anyway, I don't even want to look at a net profit margin. What we want to focus is on right now is on operating profit margin, because they're investing a lot more into growing the business. So right now they're not even focused. I mean, the company is at a stage where right now it is at a not reached at a level where they want to optimize their business for the net profits. So I would rather look at an operating profit and mid-teens operating profit margin for company which is mostly businesses from e-commerce and payments. I think that's for me, it's decent. Okay. Operating income was down 30% because of 2 or 3 reasons. Rather, there were 3 reasons. One was some tax impact. All this impact had happened in the previous year. They've already accounted and kept the cash separately. But now the lawyer says, guys, we can't win. Looks like we're not going to win the case against the government. So now they are actually taking an actual expense in this quarter, right? So that's the biggest chunk. There was almost $351 million came from that one-time tax hit. Otherwise, operating income would have been, you add 351, right? Like $600, $700 million. So no impact on the cash because the money is already kept in a separate account. And the other reason was their first party, which is grew much faster than overall GMV in Brazil. And the first party selling is lower margin than your third party selling. So that's why the little bit of a pressure on the margin from there. The third one was, and I forgot to update, investments in warehouse in Mexico. So they have almost run out of a capacity in Mexico. And so they had to invest a lot in bringing new warehouses in Mexico. So that also pressurized margin. So from that perspective, obviously when the headline number came out, market doesn't like it. Stock was down 12%. But when I looked into the details, I'm like, I'm rather happy that they're investing in building the infrastructure for future, right? And I would want them to continue to do this investment, right? Amazon had been investing for decades to build the infrastructure on which they can build a profitable company, right? And doing e-commerce is not easy, right? You have to build that infrastructure. So I'm okay with that. This one, again, was one time, no impact on cash as such. So it's not weakening the company. It's just that in accounting books, they're bringing in the expense now because the lawyers think that they may actually lose the case. So now let's provision for this. Generally, I've seen this management to be a little bit on conservative side. They don't go and start beat their chest on any small wins. So I'm like, okay, I guess market had an overreaction. So I'm like, I picked some stock. So if you're not done that one-off expenses, the net income margin would have been 9% instead of 5.5%. So looking at a business one, right? Business KPIs, not the numbers, but now look at how the GMV, etc. have grown. So GMV was up like 40% year over year. Total payment volume is up 57%. These are all in dollar terms, year over year. So total payment volume of their channel, right? Not on their website, but like a PayPal kind of a business, wherein they have a point of sale terminals. You can go, let's say, to a Safeway or to Albertsons, and when you're swiping your card, you're actually swiping on Mercado Libre's platform, right? So which is on the properties which are not Mercado Libre. That grew 64% year over year, dollar terms. Total payment numbers, almost 2 billion payments were processed, up almost 80%, right? Credit portfolio up 33%. Active users grew by 50%. Ad revenue was up 60%. So now if you look at the foreign exchange neutral number, the numbers are even much better, right? GMV was up 80%, right? But what can you do? The currency, the currency has become weaker as compared to dollar, and hence your dollar number are suppressed. A total payment volume was up like 153% year over year. Mercado Credito, wherein they have a credit card, debit card, more of an investment product. Their users doubled to 30 million. Portfolio is up 33%. Non-performing loans are stable. And the deposits on their savings accounts grew 2x in Brazil, 4x in Mexico, 6x in Argentina, and now they're starting to launch this service in Chile. So this is new. So they're, after doing performing well on the payment side, now they're also expanding their Credito business, right? Now, Envios is their shipping business. Again, was up 45% year over year. All the shipments that have been done. Not only they ship for the goods that you buy on Mercado Libre's website, they also have kind of provide this service to other sellers also. It's just like Amazon business model, right? Shipped by Amazon, but it's being sold to you by other sellers. So they had made a new investment in a new warehouse facilities in Mexico. We talked about it. They're able to ship more than 50% goods on the same day or the next day. Right? I'll skip this chart. We talked about it. Active users of 50%. Ad revenue is up 60%. And it's been growing at the same pace, like more than 60% for 7 quarters. So I'm like, maybe keep an eye on this one. Just like Amazon's ad revenue came out of nowhere. I mean, if you were not watching or not looking at the details of how Amazon makes money, you probably would have missed. But Amazon's ad business, it's a multi-billion-dollar business. And now it could become the case with Mercado Libre. Just keep an eye on the ad business. What I loved was that it's been growing at such a high rate for almost 7 quarters. So little bit of a management commentary. They relaunched Meli Delivery Day, in which you can pick up that I want it on this particular day, and then your threshold for getting free shipping is only $6 instead of $15. Consumer electronics category is doing very good. First party GMV grew 85%. So though the revenue grew, the margins were a little pressurized because this one grew at much faster rate than the third party sellers. They launched new capabilities for sellers and to create and manage ad campaigns, and 50,000 new advertisers joined their platform. What I like about this as a company and focus, they provide the information. Probably they provide the information the best way I've seen of any company. As an investor, it's a dream to look at their earnings presentation because the worst one is like Apple. You have to like spend a lot of time to find out the information that you need on Apple's earnings, which segment did how much. Mercado Libre will lay it out for you. So this is the one quick summary slide where you can find everything what happened, right? On the volumes, TPV, credit portfolio, users, P&L numbers, and how they're doing in every country. So, looking at this number, I like these numbers. So this is my, I guess probably still is the number 1 individual stock position in portfolio, and I have no mood to sell it, even though it fell down 10-12% after earnings. I think from my perspective, I think that was overreaction. I don't see anything in the business that has not performed. So I added a little more. So that's a Mercado Libre for you guys. I know this is generally not talked about company because we don't use it, but it's been a great company, and is what, $60-70 billion company. It's not even $80 billion. It's not too huge. All right, any questions on Meli? All right, so let's any holders of Meli? I know some of you hold. I know Ramesh you hold, but we have a lot of new folks who hold Mercado Libre. You still able to hear me? Oh, okay, okay. Shri is say he's short. We are in the opposite direction, Shri. Uh, Rajesh says, well, yeah, only 2 stars. That's fine. You know, it's good to keep on radar. Such says, I've been trading it, don't own this. Okay, you're trading what, option or on the stock side? Because their options are very wide. You know, you can drive a truck through their options. So it's not a good instrument for options. I mean, I do it. I right now have a put spread in place. I actually closed the March put spread just before earnings because it was already doing like 35% of the max, and I was, should I wait and take a earnings race? Should I close it? Should I do it? And I decided to close it. In hindsight, it turned out to be a good decision. You know, I pocketed that, and then after earnings, I used the same strike, but did it for April. So yeah, but it's if you look at the options, they are like $5 or $10 wide options, and that's what I hate it in Melee. So yeah, now I have an April one. So if we look at this, I'm not happy, but you know, what can I do? There is no other way to reduce cost basis. So this is like yeah, 1590, so $6 wide. Yeah, 6 to and I think on that day when I did it, maybe because the IV was still high, it was like almost $8 wide spread. So it's a little difficult one.
Vivek,
Yeah.
remember I asked you who buys put contracts, and you said it was like market makers, or was it market makers?
Most of the time, if you're because most of the time the order they send it through the market makers and they'll buy it. If it directly goes on to exchange, then it depends on who the other party could be.
Okay, well, thank you. But like I said, everything on I saved like 19 cents on my me for selling the put. So even though it went down. Well, thank you.
No worries. Yeah, so I think I sold this when it was almost $1,600 because and remember why I picked the strike price, if you ask me, because this was a strike price where my covered call spread was in the money, I think in December or somewhere, and I sold some stock, and then I'm trying to get back those stock. Right, if it goes below this, maybe I'll buy back at 1590 where I had sold my earlier, plus all the benefit that I've gotten on option income. So my eventual cost will be less. So I tried to do it in April, in March expiration, and it didn't. You know, I closed that trade just before earnings. So that reduces my cost basis. Now for April, I use exactly the same strike price what I had for March. And then this looks like the stock recovered and probably this is already making some money.
Yeah, excuse me. So if you have so you're not protected if you have you buy a call and you sell a short?
No, so this particular is a put spread, right? It's not a
No, I don't do put spreads.
so this is like a put spread.
Uh-huh.
Look at it. In which, one sec.
What I'm kind of pointing at.
This is a put spreader. So I did it when it was close to $1,600, right? It means if the stock falls down, my maximum risk is only what, $2,900 because I got $2,100 as a premium when I did this trade. Right? If the stock continues to stay higher, I'm gonna make my $2,100. Right? That's not that I'm wait until the last day to make $2,100. I'll probably close it when I'm making $1,500 on this, right? Which is a decent return. Like risking 28 and you make $1,500. In my perspective, that's a decent return. And I have some margin of safety, when I put the trade. So that's why I rather do a put spread than trying to buy a call.
Oh, but that's what I do. I don't think I do put or call spreads. So I have a put in a call at I think 90 and 100 or something pardon me, on Alibaba. So in other words, even though I have the call option, they could still buy my put option.
I did get you. Maybe if you can email me with what your trade is.
Oh, excuse me. It's I said I have a call contract and I have a put contract. Does that keep me protected from anybody exercising until I exercise?
So if you bought an option, then only you can exercise it. Right?
The
If you've
put.
sold an option,
Uh,
then anyone can exercise the option at any point of a time, and you could be assigned at any point of a time.
oh, okay. Well, thank you.
But there is a way to know if you could, most of the options you will not get assigned until the last week of expiration, except in a few cases. One is if there is a dividend coming up, or if it has gone too in the money and extrinsic value is less. I know, I think we talked about it in one of a session.
We did a few.
Yeah,
a month
maybe I can point you out to wherein we looked at how to find out if you are at a risk of early assignment in any option contract, right? Doesn't matter whether it's a call or a put. There are some situation in which you may be 3 or 4 weeks away from expiration, and then suddenly you wake up and say, oh God, I got assigned. I wasn't even prepared for taking that assignment, right? For example, if I have sold a put, and my idea is, gosh, my treasury bond bill is my T-bill is maturing. I'll be getting, whatever, $2,000 back in my account, and then I'll move that into my trading account, TD Ameritrade account, because I'll get assigned. I need to keep the cash, right? But that's like 4 weeks later. But what if I get assigned tomorrow? Right? There are a few cases in which that can happen. So that's why it's important to just understand it and see, do you run into that situation or not? All right, I see a Bobby question. I have a question on China. How safe it is to buy Chinese stocks? I think the bigger question would be how risky is it to buy Chinese stocks? I mean, you still have the risk of, I don't know how to put a number to it, because the risk of CCP is something that I can't figure out. So, you have to decide what percent of portfolio do you want to keep in Chinese. So I'm not going to make it a big percent of my portfolio. And I know some of in 13F filings, we have seen, I think Michael Burry, that's his biggest positions are Baba and JD. So maybe these things are not going to go anywhere, but I don't want to depend on, because Michael Burry is, he has a lot of money. So he can afford to lose some, or rather he can afford to lose the money of his customers, right? In this case, it's my own money. I can't afford to lose it. So yeah, these geopolitical tensions will be there, and it's impossible to put the number on the risk. So my plan is, when it comes to Chinese stocks, just stay small. I'm assuming that the stocks go down 50%, and I shouldn't be hurt too much with that. So that's my position sizing. Now it says limit order never filled at 1500. I think that's for Melly. I've sold short puts. Okay. All right, so let's what's our next one? We got 30 minutes. Next we wanted to talk about, do a deep dive into Nanox. Before that, any other questions on something that we've spoken, or anything else? Let me ask you a question. How many of you invest in mutual funds? Any mutual fund investors? I say no ETFs. Bobby says yes, I do. Yeah, because I read something which was like I'm like, oh, how does this in mutual fund industry is still surviving, right? Because in an era when you have an ETF, so from a structure perspective, it is much better structure to invest via ETF than via mutual fund. And not talking about just about the fee, because of the mutual fund charges high fee, but something that I mean, I don't own any mutual funds, so I never had to actually go through this experience. But what I found out was, even if you don't sell your mutual fund, you could still be doing a capital gains, right? Which was like, what? What are you talking here? Yeah. So now when it comes to the stocks, and when you invest a stock, when you sell a stock, if you make a gain, you pay a capital gains tax, right? When you actually realize a gain, right? When you sell your stock, you pay capital gain tax. So you can plan accordingly, saying, okay, this year, yeah, maybe I make this money, or I don't want to pay this one, so I will sell or not sell, right? But when it comes to mutual fund, even if you have not sold mutual fund, you could still be subjected to a capital gains tax, which was like, for me, it was, oh, okay. This is, and then I was started to read through why it happens and realize, oh, the structure is so bad that because of the actions of other investors, you could end up paying owing a tax to IRS, which is like ridiculous. Why would I ever do that? But yeah, if you are in mutual fund investor, make sure you keep an eye on your taxes, because given the situation in the market, if the mutual fund have sudden redemptions, they may have to basically liquidate, and you may have to pay taxes. Even though you've not made any gains, even though you didn't take any action to sell anything, you may still owe to IRS because someone else redeemed their units of, basically someone else sold a bunch of mutual fund. Naresa, meeting Vidya got rid of high MER mutual funds. I have you put in ETF because there are many low cost ETFs, and the ETF structure is that you don't pay your tax, you don't owe any taxes unless you sell the ETF, right? Which is, hey, that's a control I want. But in case of mutual fund, you owe the taxes even if you have not taken any action. Chanda says managed money goes through mutual funds and ETFs, right? So many just large institutions to manage their money. Yeah. And this is where the incentives talk about, right? Because they have a higher pricing, and they will actually invest the money in mutual funds so that they can make more money. Yeah, it's as good as a scam. And what surprises, like, this has been going on for decades now. And unfortunately, if you've been there, if your fund manager or whatever financial advisor has been doing it, they've been doing it that way. I mean, their incentive is to make more via fee, and not that you really have to make money, right? Whether you make money or not, the financial advisor who actually charge based on asset under management, they still made their fee. So that's where the incentives clash. I would rather invest with a financial advisor who will say, they don't make any fee until the threshold is reached, and beyond the threshold, yeah, let's talk about the distribution. I'm ready to share my gains, a percent of profit of my gains. But what I hate is financial advisors. Yeah, we'll charge you 2%, 1%, 1.5%. I know years ago, I went to one with my wife because she was like, "Oh, we should go to one," and he was like, "We'll charge 1.5%," and I am like, "On every year or when you make money?" They say, "No, no, on every year." I'm like, "Okay, we're not going to do that." Right. Bobby, is this applicable even for mutual funds that track S&P index? Yeah, mutual fund, yes. So you have to see if it is a mutual fund or it is an ETF. Just check on the expense ratio. Even if expense ratio is less, then you're good. If expense ratio is high, generally they'll have a high expense ratio than an ETF, then you have a problem. All right, so let's talk about the company that we had briefly touched upon during this whole AI drama when NVIDIA's 13F came out, and they revealed that NVIDIA has invested close to 400,000. I think the real number is 390 or somewhere over there, close to 400,000 in a small company called NanoX. Right. So there was another question someone asked me about that Jim Cramer stuff. So this company NanoX, I don't know. I'm not that rad nut. I didn't even spend time on it. We spent about 2 minutes looking at their website. So it looks like RadNet has got a radiology. They provide radiology services, right? If I'm more interested in that kind of a stuff, radiology, X-rays, it's my right now. I own position in NanoX. It is into not the same space, but adjacent to it, right? So let's talk about it. Any NanoX shareholders here? Anyone owns NanoX? Okay, I have one. All right, so for those who don't own it, or probably don't know about the company, this is your time to get to know a new company. And again, don't invest or sell just because I did it. Just understand it, see if you like this, then make your decision based on what you see. Again, this is right. So let me just bring up first some high level number, right? So this is an OX. Is a small to mid cap or micro cap kind of a company. Very, very, very risky because they didn't have any product. So start with, but so yeah, it's only like $500 million company, and this is after the jump, and then again it had gone back down. Almost no income because they don't even have a product to sell yet. They had a sales of just 9.64 million, very basic sale, and almost no income. So when you're looking at this company, there's no point in looking at financials or doing any valuation because this is, I would call it as a pre-revenue company, right? So it's like I don't do angel investing because the success rate in angel investing is very less. So you need to invest in a lot more companies to basically spray and pray. And I don't want to invest in like 50 companies to make because I'm more comfortable with public side. So this is kind of angel investing, but in public domain because this is like a pre-product company. All right, so let's talk about what this does. So first time when we reviewed the company, this was way back in 2020. Of course, I've been keeping an eye on it. I think probably I also did a refresher in between. I don't recall right now, but it came IPO in August. Sold 10.55 million at $18 per share. They raised almost $190 million. Okay. And now I've seen that in last 3.5 years, a lot of things have changed on their website, right? as and when they have added more product suite, they also updated their website. Now it's look a little better, more sleek, better font colors and all that than what it used to be like 3.5 years ago. All right, so what's the company's mission? They changed their vision. This wasn't even there. So basically, together for better health, they expanded or their earlier vision. Now, what they do, and their mission is scan globally to protect one's health, right? So at a high level, the problem that they're trying to solve is a imaging problem. The lack of access to imaging solutions for the majority of the world, right? Basically your X-rays or CT scans, etc. Those are very expensive, and almost 2/3 of the world has no meaningful access to the medical imaging. Right. So what they're trying to do is to solve this problem. There is an ongoing shortage of radiologists, and the workload is, the ones who are remaining have a heavy workload. So you can't get this, the you have a scan, then you basically there's a overload of work on the existing radiologists. So what they are trying to do is to use technology to solve this problem. The biggest problem. Okay, so let's and then this is more of a marketing speak. I'll skip this. Yeah. This is for the first time I saw this because they didn't have it earlier. So what they are doing is they started with building a device, right? And I will go through it. The biggest problem in the biggest problem that they are trying to solve here is to make it easier and cheaper for patients to get X-rays. And we'll go through why it is expensive right now, right? So for those, they have to build a cheaper device to get the scans done. And then they started building their cloud where your scans could be uploaded, right? And then they started building their AI solutions, which will look at those scans and use AI to give some early detection warnings to help your physicians or radiologists to make a quicker decisions, right? And I think maybe they'll create a marketplace later on. And this is again teleradiology. Basically, they have a own network of radiologists who will be able to look at the scans assisted by AI. So half of the work is already done, or whatever, depending on the quality of AI. And then they can actually and give you their update, give the analysis after looking at the scan. Radiologists can give their analysis. This is the ecosystem that they're trying to build. Okay. So it was founded in 2012. So it's not like company that just came out like 2 or 3 years ago. It's been there for some time. Unfortunately, the founder died recently. So what's wrong with the existing solutions, right? We have X-rays that have existed for years, almost for 120 years, right? Madame Curie, the inventor of X-ray. Now the problem is these machines are bulky and expensive and not affordable for poor countries, right? It's like, I think there is okay, so this is how an existing X-ray machines looks like. Now, the reason why these are bulky is the way the X-ray is generated in current machines is you heat a filament to 2000 degrees, right? And then when you heat the filament at such a high level, at a high temperature, it emits the ray of electrons, right? Which then go and hit your whatever the X-ray plate or things like that. And that's how your X-ray get generated. So the idea is to generate the stream of electrons. And to generate the stream of electrons, you currently have the heating filaments. And then if you have a heating filaments, you also need to have a cooling infrastructure that makes the machine really big and heavy. Right? So what they want to do is to get rid of this heating, the metal filament to high temperatures. Is there a way in which we can actually generate or the stream of electrons, but don't have to have, the whole process of heating it and then, trying to have the whole cooling system try to cool it, right? So they're using something called FET, which is called field emission technology. A stream of electrons can be generated at a room temperature, But that's the most important. So if you can generate the stream of electrons at the room temperature, then you don't need to have the whole big infrastructure trying to cool down the machine, because there is no heating involved in it, right? And if that happens, then your machines don't have to be as bulky as what the existing X-ray machines are. So let's try to get a X-ray machine images. So, okay, yeah, these whole big images. So how they do it, right? So what they are looking at as a first step is to figure out how to generate electrons without the huge heat. So their solution is based on digital microelectronic mechanical system. Mouthful, but I think from a layman's perspective, I don't want to get to the tech of this. Layman's perspective is because there is a way in which I can generate stream of electrons at a room temperature, right? And they developed this technology for over 8 years, so that now they can actually commercialize it. Now, when it comes to so once the ray of electrons have been generated, rest of the process still the same, right? The rest of the X-ray taking process is still the same. It's the only difference in this case is what's your source of generation of your electrons, right? Instead of using the heating filament, they are using MEM, semiconductor cathode. Right? Now, that because you don't have the big heating and cooling infrastructure, the weight comes down, plus the cost of these machines also come down. If the cost of the machine could come down, then you could actually deploy more units across the world, right? Even in the poor countries, because now the cost of the X-ray machine is less, and hence more and more population across the world can now have access to cheaper X-rays. So that was there. So eventually, the footprint of NanoX ARC would be like such a small one, right? Just round tube that you see. This is more of a representation, but I think we can go and look at an actual machine, how it looks like. Right? Now, once you have this cheaper way of taking X-rays, which will help a lot more, may not be in the developed countries, but a lot of developing countries, once they start taking more X-rays, then they start to also build a suite of cloud-based services, based on then, you upload your scan, those scans will be reviewed by teleradiologists, and then you can get an analysis of, what's the issue. So they're also building their cloud infrastructure, which is called NanoX Cloud. And overall, if you look at their business, in terms of how they're going to make money and overall how much it will cost. So their numbers were that we can actually reduce the overall cost of X-ray from on an average of $300 to $40, which means including the fee of taking X-ray, plus radiologist, plus some buffer for any other expenses. So in this case, $14 will go to Nanox out of $40, $16 go to radiologist, $10 is a buffer. Now, this they added after IPO because now they have more products. So because now you have these X-rays, what they've been doing is to now they have almost 30 million patient records and 500 million images taken through their X-rays. They're trying to build their AI cloud, in which now they can use AI to look at these X-rays, and they've used these images to train those AI, and then basically help the physicians and the radiologists to do an early detection. I'm not going to go through all, but now they're trying to build the overall ecosystem. Okay. And the health solutions that they have is, for example, one of the health solution is Health CC SNG. Right? This is already FDA approved. What this does is, you go and take a general X-ray, not taken specifically for your coronary artery, but looking at the same X-ray, routine chest CT scans, they can use their AI solution to give you some early warnings, if you may be at a risk of, any your heart disease, heart attack or not, right? Some early warning. So that's one health solution. Similarly, they've used created other products. Another one is Health OST solution, which is to look at your bone density and tell you if you are at a risk of osteoporosis or not. The third one is Health FLD, which is for fatty liver, right? And this got approved by FDA very recently. Again, probably they will build more. Their main idea is the same. Take a scan and then use AI. First of all, make it easier and cheaper to take a scan, which is what driven by their NanoX ARC machines, which is like these machines. And these got recently approved. I'll go through in terms of where they are in terms of their approval stages and all that. So make it easier, cheaper, so that more people can afford the scans. Then use their AI to review the scans and build solutions around those scans, right? So now if you take a scan, if you take on your chest scan, there is a solution for health, CST and all that stuff. Then they have osteoporosis. Now they have a fatty liver solution for looking at a fatty liver. Right? The question is, does this company has a moat? There is a question. Will Nanox have a moat like a ISRG? Let's look at that. So they use a novel technology. They use the chips to generate electrons instead of hitting filament, right? Can anyone else use it? Maybe. So I don't think they have a moat here because the tech is not new. It's that they did not develop the tech. The tech was developed by the Sony engineers when they were trying to build 3D TV. Remember, 10 years ago, 3D TV used to be like, hey, that's going to be the next one. We're going to have in our homes, we can actually watch 3D movies. That didn't go anywhere because Sony shelved the project. But in that, during that project, they were working on to generate a stream of electrons without the need of bulky hardware. So some of the engineers left Sony and then they've created NanoX, and they were thinking, can we use the same tech for a different application? Forget about 3D TV. If I have a stream of these electrons, that's what the X-ray does. Maybe let's see if we can repurpose this for medical facilities. So they don't have a mode. I think their only mode could be the network effect or the low cost. They don't have any, I would say, I mean, others can also, let me put it another way. I think they have a mode on this particular tech. Even this is not new, but I think they already acquired the tech, the technology from Sony. So now they own this tech. So they do have the tech to generate a stream of electrons at a lower cost, right? But there are current existing ways of generating a stream of electrons, which is the existing X-ray machines. Someone else can also build up a cloud applications or build AI to analyze those X-rays, right? So they don't have a mode in terms of analyzing the X-rays, but they have a mode in terms of making it cheaper using the FET technology. So they've been granted patents in US, Israel, and Japan. I'll go through the regulatory stuff later. How they plan to make money, basically medical as a service. They want to give the machines free to hospitals, and then they will charge per scan basis. I'll not go through the math of that. Or they can license the tech to GE Medical, Siemens, Philips, right? They can develop the machines. Or where, they cannot do machines or medical service as a service, screening as a service, they can actually sell the machines. So There are different ways. Basically, these are their, I would say, business models. Depending on what works where, they could use. Margins overall maybe look to around 60%, and generally when companies come IPO, they will hype it. So let's say 40%. They have decent partnerships in terms of manufacturing, as well as I'll go through a few more partnerships later on, the reasons that they have filed, because they're not going to manufacture the machines by themselves. They're probably looking at Foxconn or the SK Telecom to, I think the Foxconn is going to build the ARC machine. SK Telecom, which is South Korean telecom, is going to build those chips, which will generate those electrons, right? So that's the partnerships that they have. What else? This is old. The CEO has died. Their goal was to have 15,000 units, but that's delayed because FDA approval came late. They haven't shared what the current goals are. Financial, it's a pre-revenue company, so no point in looking financials. Business risk. So when I did an initial review, almost 3.5 years ago, the biggest risk was regulatory approval. But now they have a FDA approval for their ARC machines. So I think that's over. So existential risk is over, but they do have a execution risk, right? Now they need to execute on their strategy, which is ramp up the manufacturing, create a demand, and then basically, deliver it. And there was also a short seller report from Citron. If you're interested in that one, I think you should look at that, because you should always look at, it's 404 now. So it looks like they removed it. So there was a short seller report on, this is nothing but a scam. So I did review it at that point of a time. I was not convinced that it is a scam. So I'm talking about like 3.5 years ago. So I did open a position then. What other optionalities they may have? They could actually use the same tech to do other kind of a scans, right? And now we've already seen they moved into chest CT, they moved into osteoporosis, fatty liver, they can use it for breast cancer, right? They could actually do it for real-time video imaging, right? For airport and seaport security, for military purposes, for non-destructive testing, for industrial uses, right? Semiconductor industry uses X-rays. They could also use Nanox tech. So the whole idea is, if we have a cheaper way to generate the stream of electrons, which is traditionally being used for more than 100 years in generating X-rays. So wherever the use of X-ray is, they can actually go and start to attack that market. So they do have a lot of optionality. It's not only stuck to medical side, but like I said, military, airport securities, and all that stuff. Right? So let's look at the latest ones, what's been happening with them. So I've been tracking this so let's look at the regulatory approvals. So they got approval for FDA for the third product, which is Health FLD, fatty liver acid on Feb. They got approval from Ghana, Israel, but it's still waiting approval from Europe, Mexico, Brazil, New Zealand, and Australia. So US has given the approval for the NanoX ARC machines, that yes, you can use these machines for medical purposes. So that approval they got in Q1. So which maybe I should highlight this, because that was the biggest moment, saying, okay, now you don't have an existential risk, but now you need to execute on your strategy. Okay. From an execution perspective, recently they've signed agreement for manufacturing of tubes, warehousing, maintenance, and all that, but I haven't really got an update on where they have been able to install. They have installed in a couple of US hospital systems to run the trials, but not yet taken up at a higher level, right? So what happened to the stock recently? Stock gone crazy because NVIDIA had invested in it, and because it has got a medical AI name attached to it, right? I don't give any credence to any of those things. The idea is, hey guys, they need to basically perform and execute on their strategy. Stock has been at multiple places during the crazy days of 2021. I think it was almost up to $40. Oh, the high was like 64, right? Yeah, so it was like stayed at when it came out as in public, and I think it was what, yeah, 53, and all the way as low as I would say $4. Right now it is trading at $8.62. The more recent one where I was saying what the heck is happening to this company was when they got their health FLD approval, and then more recently on their NVIDIA investment, which is like crazy. That doesn't make the company business 100% better. So I use that opportunity to, sell some calls at $12.50, a few of them, and, collect some decent money to reduce the cost basis. But again, this is like your angel investing money, or if you have an itch to scratch that you want to do some risky investment, it is a risky investment, right? Because they don't have any revenue, but I'm willing to hold for 15 years and a small position. At the end of the day, what matters is the position size, small position. So who cares if it goes to zero, right? If not, it becomes like a big company. Yeah, the small position will do good. So that's NanoX. All right, questions on NanoX. Sometimes these, I don't have much expertise on the medical side and never been interested in much on medical field, but sometimes it's good to, get outside of our comfort zone and try to pick a company which is in a different field. And now I put my money where my mouth was, so I hold position in NanoX. Questions? Comments? Interested? Not interested? It is risky. And if you can't keep track of what they're doing, it's still a moonshot. It's a moonshot play, right? Less than 1%. All right, so I'm done with NanoX. Chandra says, I remember buying early times and sold for loss. Yeah, I mean, when I bought it again, my period was, guys, it's a kind of angel investing. It's the company's an angel investing phase, so you need to have a really long time horizon and be okay with the fact that the company will go to zero. And I'm okay with it. If it goes to zero, it goes to zero. It didn't work out. You did a VC investing, it didn't work out. That's fine. That's why the position size is very, very important. But I'm willing to play along and hold it. Only thing is, because these are public companies, you actually get to see some numbers. The reason I don't do angel is it's like, first of all, I mean, you don't know what numbers to believe. Number two, it is you need to invest in at least 20, 50 companies to make it worthwhile. Because you don't know which one will become Uber or which one actually will become Google. It's good to say after it has become Uber, you can come and thump your chest and I invested in Uber, see? But when you were investing in Uber, you had no idea whether it will become Uber. You invested in another 50 companies. One of them became Uber, all others died down, right? So it's a risky stuff. Cool. So I think that's it. That's all I had in my plan for today. Anything else? Any thoughts on Reddit IPO? I did not look into Reddit. IPO. I know they filed publicly, and I can only tell you what few messages that I saw on Twitter. I have not looked at their S1. One was they have mentioned that the Wall Street Bet, the subreddit Wall Street Bet, is as one of the risk factors in the IPO. And then some thread around maybe now the Wall Street Bet will try to short it and go against it. Again, this could just be rumors, right? Or don't believe anything that you see on tweet kind of stuff. The other one is, I think they are, what's the valuation they're asking for? I think it's again kind of a way lower than what their previous round was. Reddit S1. Let's open up. There we go, Reddit S1. So they haven't mentioned what price they want to and how many shares they want to sell. Okay, so probably they'll update it later. 100K active communities, average daily unique users 73 million. Is good. Weekly active 261. Post is $1 billion. Wall Street Bets. I think their play and what they're doing is the right thing right now. Is their play is, guys, we got a lot of data, and in case of AI right now, all we're looking for, we need tons of data to basically train the models, right? And any good data sources with authentic data or the original data now suddenly become valuable, right? So there is a play for them because they have a lot of original data. Now the bigger question is, what's the cost they are willing, how much are they asking as a valuation? So revenue was what, $666 million, zero operating income. Oh, sorry, I'm okay. $804 million is the revenue. $140 is the operating loss. So no operating income. Means either you depend on debt or you depend on selling shares. So net income 90. What is it? 53. But they got some other income. Yeah. So what else? Cash, $1 billion worth of cash, $1.3 billion working capital. The cost of revenue, depreciation. With the $5 billion of value, they're seeking $5 billion valuation with 75 million users. That seems to be daily active users. Right? That seems to be high. 73 million daily active users. Oh, but if right now, I think there are many companies who may be willing to pay. Have they mentioned, again, I've not gone through it. So have they mentioned how they make money? This is a letter from co-founder. Okay, maybe what we'll do is they make money through subscription. So is like individual subscriptions or corporate subscriptions. I think my thinking is probably a lot of companies like will subscribe to Reddit to get their data. Is that the one or is something else? It will be good to look at how many of corporate customers they have versus how many of them are paid by individual users. So, and then they have advertised. So, okay, there we go. They got a advertising, they got a data licensing. Yeah, so they do mention AI model training. And I think right now it's a perfect time to come IPO because anything to do with the AI, whether you have a data that can be used to train the models or you are AI company itself, market is willing to pay you the premium numbers. So I think that's why they decided because they've been trying to come IPO for 2-3 years, I guess. When was the last time they filed S1 confidentially? Reddit S1 confidential filing. 2021. So it's almost, almost 3 years. And then the market soared. Then they couldn't go IPO in 2022. And then 2023, all the tech companies were bad. So they couldn't go IPO. Now they're seeing this whole AI wave coming in, and they say we can ride this wave. So good for them to decide to come at IPO. They waited for 3 years. Maybe we can do a deep dive into it in the next session. I was surprised to see Sam Altman has 9%. Sam Altman is a rich guy. He's out there trying to raise $7 trillion. Well, I haven't looked into it, but I think there was a news that OpenAI actually allowed early employees to sell their shares. So maybe Sam Altman sold some of the shares. And I don't know, it maybe have to do with, there are questions around the whole governance of OpenAI. So the OpenAI has become such a, it's a hot pot when it comes to corporate governance. So they could have allowed some of the early founders to encash, who knows? Again, I have not gone through the detail, but I think I saw some tweet around that. All right. Well, as any other questions? Anything else you want to look at? I can hang around for 5-10 minutes till 12:15 or 3:15 for those who are on East Coast time zones. Okay, so yeah. TMO. What is TMO? Which is TMO? Oh, Thermo Fisher. Just give me a moment. Let's just 1 second. TMO. Okay, so it's a $218 billion company, $2 billion sales, $6 billion in net income. Sales have come down, so we'll figure out what happened between 2022 and 23. Looking from earnings perspective, looks like expensive, but if they have a moat around their business, maybe market is willing to give them a higher valuation. How much is the enterprise value? They don't show it here. Margins perspective, 40% gross margin, 17% operating margin. So this is a company that develops instruments for medical industry, right? Okay, for medical labs. Oh yeah, these instruments. Okay, so I think then 30 40% gross margin is fine, 17% operating margin. From a margins perspective, looks to be good. Let's look at how the trends have been. That we'll have to check. No share dilution, which is good. So they're not going in and issuing tons of stock. Right now, where's the stock trading? It's like, is that their all-time high or where it is? TM4. No, so 593 was 52-week high. Let's look at. Okay, it's been around for a long time. 5-year. Okay. Let's add a time frame of maybe 10 years. So 600 something was his all-time high, and it's almost range bound for 4 years. Okay, let's see if like we can find about its earnings and all that stuff. So just a moment. Earnings have been quarter earnings have been choppy. Operating margin fine. Operating cash flow is fine. They are able to generate some good free cash flow, no doubt about it. From a valuation perspective, for last 4 quarters, they're $7 billion free cash flow. This is a medical company, so I would assume the regular economy like 3%, discount rate 10%. It's established company. The risk of them, of future earnings is not huge, so I'll take a middle one. Expected free cash flow, let's say from a revenue perspective, they've been growing at what, 6-7% revenue year over year. So let's give them 6%. So currently, based on this, currently it looks to be a little overpriced. Sales have been okay. Sales revenue growth for next 5 years is 6.74%, 7%. Yeah, still to me looks like to be expensive from a free cash flow perspective. Unless they have a moat for which market is willing to accord this higher valuation, doesn't make sense. Again, to dig a little deeper to see what kind of moat they have, but they are able to generate some nice, good free cash flow, no doubt about it. And in case, let's say, if the market soar on these high-flying companies, right? Then the companies like these, which are able to consistently generate good cash flow, is not going to grow 40%, but will be able to grow 10%, 15%, will become much more valuable. So that's my thought on it. It's an okay company, just I'm a little concerned about its valuation right now. But seems to be a very well stable company. Do you own Google stock? Any comments on the Gemini AI product? Yeah, yesterday night, actually, I was thinking about it. They've been trying to release their AI, and every release, they goof up with something. So yesterday night, in fact, I was thinking about, as you guys know, I own Google stock. I think it's still part of a top 10 of my portfolio. Maybe we look at the end of Feb, right? What percentage it is. But I've been bullish on Google. It's a cash spinning machine, right? It generates, like we were just talking about it when we looked at NVIDIA. The NVIDIA's revenue is what Google's net income is. So they generate lots of cash. But now the bigger problem is, and this is what we are seeing with AI, is, hey, have they become too complacent? Have they been able to, have they been sitting on their laurels for too long? So they tried to, first of all, they were behind in releasing AI. Then when the first time they released AI, it gave a wrong answer. Now, when they in the latest update of Gemini AI, it was trying to, it was not telling you the truth. You ask them to give a picture of George Washington, and it's showing a picture of an Asian George Washington, or American African George Washington, because they want to bring in diverse community. The truth is the truth. George Washington was a white guy, so let him be white guy. Don't try to change George Washington because now you want to be inclusive. Now the bigger problem which I'm thinking is, because who even how could they even release this product? Right? So it's like, what the crap? So my thought was, guys, maybe I don't want to add any more to my Google position. And I have not decided. This is what yesterday night I was thinking about, is they've been missing it, at multiple times. So maybe I don't want to own anymore, but reduce the cost basis. I own Google. And from a just numbers perspective, it's a great company, but are they going to be relevant in the future when the AI is becoming so prevalent? I don't know. Sometimes to me, it looks like, this is a symbol of some deeper other problem. Who actually AI'd that? Oh, sorry, who QA'd that and let it go? So they've been great in search, but are they going to lose ground on AI is a concern I have. Yeah, it was a shit show. I agree. And I think they fired the head of Gemini or something like that. Basically an executive. And they also have rolled back that, whatever update that they had done on Gemini. But it's the missed ones, now they goofed up again. So they really need to tighten up their belt. Yeah, Google search is good. I agree. And I think I still don't use ChatGPT for search and all that. Because many times ChatGPT will just refuse to answer the question. I still use Google search, but I'm sure, if all the other products are gonna start to infuse AI in their normal products that we use, will they be using Gemini, or will they end up using OpenAI, Microsoft? Right? If Gemini continue to have such failures, then rather I'll use Microsoft's or OpenAI. Or there could be other companies, right? Even on the search side, there are new companies that are kind of a challenging Google at using AI. So they enjoyed the so-called monopoly for 15 years, but there are challenges coming up on this one. So I actually start to get a little concerned after this whole new AI release. Asif asks, any thoughts on Rivian earnings? They are guiding to be positive gross margin by end of year. Is it too early to get in, assuming they succeed? I actually didn't look at a Rivian earnings, so I know the stock was punished. Q4. But I thought they're still losing Isn't Rivian still losing money on per car or whatever per vehicle? So 81 gigas per vehicle improvement. Where is the press release? This is the shareholder letter. Let me just download it. Did they have their press release? Let's go to Q3, Q4. Okay. Total revenue is $1.3 billion. Almost 14,000 vehicles. And then on the gross itself, they lost 600 million, which is an improvement from, okay, that's fine, but they're losing 600 million just at the gross level. And the operating expenses is 975. So that adds up to $1.5 billion of loss. So yeah, so net loss is almost $1.5 billion. So they are losing more money than what they are actually, more than their revenue, which is like crazy. Yeah. So rather than Rivian, maybe I'll rather pick Tesla. With $9 billion in cash and cash equivalent. So they're probably not gonna, so they have what runway for so 1.3 million was the revenue and the net loss is 1.5. So almost $2 billion of expense. They have a runway for 4 quarters only. $9 billion. Do the financial statement here? No. Okay, the financial statement would have been here. I'm just trying to look at their expense and how much runway do they have. There we go. $795. Yeah, total operating expenses $795 plus they haven't given others. Gross profit per unit delivered 124,000. Too much riding on hope. Can they turn around? Maybe, but do you want to invest in it? I don't know what stage are you at in terms of your investing. Oh, sorry, 2023. I was looking at 2022. So 2023 picture is also not that they've improved, no doubt, but still they're losing $43,000 per vehicle delivered at a gross level. And then you add more at a net level, it's even higher, right? $1.5 billion of a net loss. So, and then they ended up with 7 and almost $9 billion of cash. Yeah, so they'll need to raise more money. I mean, they got what 4 quarters of runway. They don't generate anything from their operations, so they'll need to feed. They'll need to feed the factories. They'll have to feed the employees. Where will they gonna get money from? I would rather wait for it to perform and tell me whether they are really worthy of my dollars or not. Yeah, again, because I'm not looking, to take this lottery ticket right now. Could it become next Tesla? Sure, but then there will be opportunity to continue and see, if they improve upon what they said that they will. We can look at it next quarter and see if they do it better. At current valuation is how much, Rivian? What's their market cap? Is $9 billion, right? So if it really becomes a big company, we'll have a plenty of, I mean, it won't not gonna stay at $9 billion, will be 30, 40, $100 billion company. Right? If that's the case, then we'll get plenty of opportunity to add it later on. I'm not, again, I think when it comes to the pure play EV, these in US, Tesla and the Rivian are the only one that I have on my watch list. Right. Others is a GM is not pure play. Ford is not pure play. Other I have is all Chinese. But then Rivian has to show itself worthy for me to add a new capital. Right now, I don't find it as I at this stage of my investing, I don't want to invest in Rivian. And that's why I've been adding to Tesla now. Tesla looks to me, Tesla looks more attractive right now than Rivian. Chandra, Tesla is proven streamlined manufacturing process, able to make profit, low margins. Yep. All auto stocks are long-term after the strike and the EV slowdown. The problem is, shouldn't happen that you buy this to do a quick trade and you end up becoming long-term investment because now you're a bag holder. Sometimes I feel, hey, these stocks are my long-term. Is that a euphemism for bag holding? I'm holding the bag now. So if you went in with the thought of, oh, it's going to be long-term investment, that's fine. Not that, hey, I think it's going to go up and then it falls down 50%. Now it has become long-term investment. All right, guys, I think that's it for today. So Chandra, I'm holding Tesla losses from 2+ years. So Tesla is so, and I haven't been a big fan of Tesla as a stock, but I think I should give where the credit is due. Tesla, I've always made money in Tesla as a stock. I've never, except last few months, I've never owned Tesla stock. Only I've been doing was just options, because I could never convince myself to buy at that valuation where it used to trade. So it was only short term, but there is always a price point where you change your opinion. Right. So I know Asif, he used to tell me when you're gonna be, and then Asif, you welcomed me in the club, right? When I bought Tesla last year, I think October. Let me just pull up. When did I buy Tesla? But Tesla has made some decent money for me when it comes to, if I look at everything, including all the money that I made in options and all that stuff. It's one of a good stock, turned out to be a good stock for me. So I'm just looking at Tesla TSLA. Yeah, so October 2023. I think in 2021, I bought some 3 shares and then sold it immediately in 2-3 months. And then I finally bought, when I say, okay, now I'm convinced, I bought it in October 19th, 2023, and have started to build positions since then. But overall, Tesla has given me decent money in 2020, 2021, 2023, some good option money. So my overall cost basis is, I mean, if I consider that option money reduces the cost basis, is pretty low. All right, I guess 12:30. Oh, YouTube. Actually, YouTube goes later because I've not been great on YouTube. But let me just give. Well, does it? I don't even recall if it goes by my name or not. No. Okay, let me just give this link. Hope this works. Oh no, it's not on my name. It's a name of option gig. And see if this link works. Okay, cool. All right, guys. We'll talk again next week. Thank you all for joining in. Hopefully, let's see what this week brings for us. I've been cautious, and the market is at extreme greed. It's time to be cautious. That doesn't mean market is gonna crash tomorrow, but hey, I don't have to be greedy. If you made money, enjoy that. Just don't lose it. All right, thank you, everyone. Let's talk again next week.